Nigerian stock market, of course, finishing strong, 18% index return in the first half of 2023 as the rally that started May 29th continues, pushing also our index past 60,000 points. Like I said, 2008 was the last time that we saw that happening. Also, yields on government treasuries falling sharply today at the final primary market auction conducted by the central bank as liquidity remains high in the financial system. And there's more in the first 6 months, of course, of 2023, characterized by high wire politics, Naira redesign, new administration in the saddle. All right, walking us through first half of the Nigerian market now is Mr. Johnson Chukwu, Group CEO at Cowry Asset Management. Good evening, sir. Thank you so much for joining us. Really happy to have you. So can you give us an assessment, broad assessment of the domestic markets in the first half of 2023, which of course ends today?
Thank you, Rotus, for having me. Looking at the market, so far you have already presented some of the highlights. We saw the equity market rally up to about 18.96% in the first half of this year. We saw the bond market rally by about 4% in the first half of this year. And then we saw some of the highest market gains on a monthly basis that we saw in the month of June. We saw a market gain of about 9.3% in the month of June, which was preceded by a 6.4% gain in the month of May. So that's one of the highest we've seen so far. And it reversed the declines we saw in the month of March and April. That's looking at equities. Well, even if you go to the bond market, you also saw that the bond market at the first quarter of this year was negative, but we saw a rally of 7.9% in the second quarter of this year, and which led to a rally of about 4% at the end of the first half of the year. So clearly, the investment community is excited with some of the policies that have been pronounced. If you recall, Rotus, some of us had cried ourselves hawks on the need for us to liberalize the foreign exchange market, particularly to harmonize the exchange rate. We have talked extensively on the need for the government to take out the subsidy. You can't afford to continue to pay for about 400 billion naira monthly when spending about more than 6.5 trillion naira in a year, when your total revenue for last year was about 6.5 trillion naira. So clearly, the market is excited, investors are excited, local investors are excited. I also believe, like you pointed out, some of the rating agencies are already showing indication that they will revise upwards our rating should the trajectory continue.
All right. And do you think the high political risks that were priced into the market in the first quarter have now dissipated?
Well, if you look at the fact that the market had gained, the equity market had gained 18.96% at the end of the first half of the year, that means that the market has completely neutralized what the losses, the concerns we had prior to the election. If you look at what the market did, I mean, the market, like they always say that the equity market is a barometer to measure the outlook of an economy, the optimism of economic operators in an economy. If you look at the first 6 months of this year, the first month of the year, the second month of the year saw market gains of about 3.1% and about 4.3%, because expectations was high that the election was going to be free and fair. The front runners were all market-oriented operators. That is Labour Party, PDP, APC, and even if you look at the NNPC, there's Rabi Kwakwanso. Yes. They were all free market-oriented persons. So the assumption was that whoever won the election will ordinarily drive free market policies. All of them, apart from Rabi Kwakwanso, had said they will take out the subsidy and that they will also harmonize the exchange rate. So the market gained. But when the election came, the nature of the election led market to begin to decline. We saw a decline about 2.3%, which was an indication by market operator that, look, they were not excited, they were not happy with the way the election went. And that was followed by about 3.37% decline in the month of April. But when the inauguration took place and the pronouncement, the inaugural speech was made, where it was clear they're going to reform the banking system, they will revise the consistent contractionary monetary policies that had not in any way curtailed inflation. They talked about, they said subsidy no longer exists. And that market felt excited. And they also said they will harmonize the exchange rate. So that's why we saw in May, the market gained about 6.4%. And then followed by the bullish, one of the most bullish rallies we've seen in recent past, of almost 10%, 9.3% in the month of June. So what has happened is that at every point in time, the equity market mirrors the expectations, the optimism or the lack of optimism of market operators.
And did you notice any particular trends in both the foreign and local investments as far as the first half period? I mean, like, locally, I think financial stocks, downstream stocks, at least for the downstream oil and gas sector. Any trends at all? Did you pick up on any?
Yeah, the trends are, if you look at the votes, if you look at the top 10 gainers in the first half of the year, of the top 10, 10 of them are downstream market operators. MRS gained about 460 basis points, 460% in the first half of the year. And if you look at it, turn again over more than 200%. And then I think Cowry will also gain more than 200% in the first half of the year. So, and these are extreme gains. So clearly, investors are voting on the stocks of downstream market operators, petroleum market operators, because they expect that the regulation will free up the shackles that are holding back this sector. Because remember that none of the operators were importing fuel. So you're going to be dealing with market operators who will now deploy their competencies and their network of retail outlets to maximize returns. So investors have voted for that. We've seen other marginal, what we call penny stocks gain, the likes of FTN Cocoa, gain the highest in the first half of the year, about 700 basis points, about 724% in the first half of the year. So clearly what has happened that you have the downstream market operators gained, petroleum market operators gained. You also saw penny stocks gain, the likes of Transcorp Hotel and Transcorp itself also gained. Of course, we know there are underlying factors in Transcorp because there was an attempt by Femi Otedola to hold a significant stake, which drove up the market price of Transcorp. So in terms of Naira vote between local and foreign investors, I think the market has been still dominated by local investors. Of course, foreign investors will come when two conditions are fulfilled. One of which that Naira liquidity will improve. Second factor, you're going to see more stability in the exchange rate. Those factors are simply none for foreign investors to begin to aggressively bid for Nigerian local currency instruments.
Excellent. Thank you for the breakdown. Do you see for those who feel like maybe they've missed out on this first half, where, perhaps, not sure whether they should jump into the market, do you see the sentiments around, the fuel subsidy removal, FX market reforms? Do you see that continuing to play into the third quarter starting from Monday?
The government has taken some of the most difficult decisions. The next thing is that we now need to look at how implementation is affected. Today, I don't think any local operator has imported fuel. We have to prove FS liquidity. That's very critical. The central bank must be in a position to meet demands as what we call the market maker in the FS market, because the central bank receives almost 90% of foreign earnings. These are factors that will shape the outlook going forward. What I would say is that the policies that have been announced seem to have resonated positively on investors. We now need to look at how they manage the fallout. Of course, there are social issues that will come up. There's always what we call lag effect when it comes to social issues. Many of the most vulnerable Nigerians are going through very difficult times. I'm hoping that the government will respond quickly, timelessly, to make sure that whatever palliative they want to put in place are available to them, so that we don't see unintended negative consequences of the policies. If they are able to manage that, I think investors should continue to bet on Nigerian instruments.
All right, Mr. Johnson Chukwu, Group CEO, Cowry Asset Management, a pleasure speaking to you as always, sir. Thanks for taking us through the markets for the first half of the year. We'll see what happens for the second half starting Monday.